And Matt, you did mention the communications sector. I think right now would be a very good time to kind of look at that, because one thing we were having a discussion in pre-production here is, where the strength is within the sectors. We're getting pretty good movement across different areas of the market, no question about it. Tech's ripping today, discretionary is coming back today, but comms grabbed my attention the most because of the potential breakout. And Tyler, we put this on the option report last weekend as a candidate. I know you discussed it in the report and talked about some different ways you can play it, and it's just showing me something here. And then we went and looked at some of the individual components. So tell me what you're seeing here in communications. And I believe, Matt, you've got some stocks that you were going to highlight as well. But
well, I do think first of all, I like spotlight sectors.
Yeah.
Like I like that. Maybe that's something we could do on a Thursday, segment with Tyler, do a sector spotlight, right? And I like doing that. And so we were taking a look, coming into this week, and again, very difficult environment coming into this week, but we did increase our rankings for finance, energy, industrials, communications, and we actually put those 4 ETFs on our options report this week. Once again, we like the technical patterns coming into there. Communications finally getting that breakout that we've been talking about, and the potential of that breakout. So, yeah, communications was an area of the market that we thought was setting up for a potential breakout. We liked the fact that it held its head up in the volatility of the NASDAQ. And so with communications breaking out today, obviously we've talked a lot about energy recently. We've talked a lot about industrials recently. We've been all over finance recently, and we've been talking about comms. But I want to take a look at some of the industries here in comms and see if we can find some strength here with this breakout.
Yeah. Can I mention one thing to preface this?
Yeah, go ahead, Tom.
And then we'll jump in. From a charting perspective, one thing I think is interesting is it took a couple of days for communications to break out. Tim mentioned this pre-show. We've seen the sectors kind of take turns a little bit. You'll note today financials are basically just taking a nap, right? Whereas they were stronger earlier in the week. Sometimes when you get these sector setups, and we highlight them on Friday or over the weekend, Monday didn't really do much. Tuesday didn't really do much. Yesterday tried to break out, couldn't do it. And then finally today, you had to wait 4 days for this to finally show up and do well. But it's doing well finally. And the pattern never broke. It was always in play the whole week. And finally the baton gets passed to communications. So I think just a reminder that you keep your eye on the pattern. Sometimes it takes patience, but if we're in a bull market, eventually it goes.
Yep.
Mm-hmm. Mm-hmm. And those sector highlights that as they've been moving day by day by day by day, it's creating a great environment for stock picking, for traders out there that know kind of what they're watching for. That's how we build our watch list. And I guarantee we're going to have some communication stocks on the reports this weekend. So Matt, what were some of the highlights that you've seen in the communication sector?
Number one, I enjoy being a top-down analyst. Mm-hmm. I mean, it just allows everybody's going to find their niche of how they navigate the marketplace and how they can make the market make sense to them, because sometimes the market disconnects itself from all reality and you have to be able to still be able to make sense to you, right? And so I like the top-down approach to the market, analyzing the market indexes, making sure your portfolio is always moving in the direction of your own personal bias towards the market. I love looking at different sectors and finding an edge in sectors and then breaking down to certain industries. And when you're looking at communications right now, obviously, comms kind of runs a little bit with tech. Remember, a lot of the names that are now in comms, they were kind of they were miscategorized for years and years and years. And we had a lot in tech, we had some in discretionary. And so a lot of these plays that are now in communications, they originate from discretionary. They originate from technology type of companies. And so where they now are in comms, they obviously do run a little bit in the same circles as technology and discretionary companies. And so when you're looking at the discretionary sector in the last couple weeks, you see a sector that has just been very volatile. When you look at a technology sector, again, very volatile. But when you're looking at comms, companies like Google, even though Google hasn't broken out yet, it didn't participate in that type of volatility, and communications in general did not participate in the type of volatility that the market got caught up in to a certain extent. And so you got to like that about comms. You got to like the fact that it did not get caught up in the volatility that impacted the areas of the market that they have correlation with, and that is discretionary and technology to a certain extent. So when you're looking at comms, what I want to talk about today is I want to look at some of these potential these industries in comms to see if we can find some trades is basically what I want to do here today. And yes, comms is breaking out today with confirmation, and it is up over 2%. So you might want to see how it navigates tomorrow, and maybe this is coming into the weekend and maybe Monday triggers. But again, putting them on the radar is always important in my opinion. So let's take a look at a couple stocks here, and let's first start with stocks that would be your traditional type companies that we think about from a communication perspective. Now, once again, when you're thinking about communications, it's a hodgepodge of all these other different sectors that we categorized as communication companies. You have advertising companies, you have broadcasting companies, you have entertainment companies, internet content companies within the communication stratosphere. So looking at specifically those big names that typically get tied into communications, that would be your internet content and your entertainment companies. Let's take a look at some of your internet content companies. Let's take a look at Google here. One of the biggest names, obviously, in this space. Google. Google's been trading fairly similar to what's been happening in communications. The difference here, Tyler, comms breakout one day in front of Google's breakout. What do you got here on Google? Do you see a read here?
I see a couple of things. So first of all, you got to be impressed that Google held up a lot better than the NASDAQ. I mean, this is going to get lumped in with tech to a certain extent. If this did what the NASDAQ did, if this did what Amazon did, if this did what Apple did, it would have been down at 1,800 bucks. But it did. It held firm near the highs while everything else got beat up. You got to be impressed by that. Number two, I like the fact that the sector's breaking out. It tells me there's bullish sentiment around there, which I think increases the odds that Google breaks out. The third thing I'll say is Google is kind of a choppy stock, right?
Very much so.
And so I think you have to look at its tendency to pop and chop, pop and chop, pop and chop, which means I would be patient. If like strategy wise and expectation wise, if I were going to play a breakout like this, given the nature of the stock, like this is not FCX, right? FCX, I'd be like, look, breaks 2,100, it's going to rip to 2,300. Let's do something. I'd probably be a little more patient with this, but I think you got to be interested.
I think it's a tough trade because it's like you said, it is choppy. It's a little bit more difficult to find. Okay, I'm going to trigger here, get a stop loss here. I think if you play Google, it's more in the spread type capacity, right?
Yep.
Bull calls if you want to be directional, bull puts if you want to take the credit. But again, I do think you do have confidence there on Google, given that fact that it held up, but it's not performing better than the actual sector here. And so
True.
I want to take a step away from Google. I just want to bring, because it did maintain.
It's the big name.
It is a big name. But when you look at just internet content companies, you only have three of them. You have Facebook, you have Google, and you have Twitter, right? Facebook coming off the lows, coming up above 270. That's interesting. But to me, Facebook's interesting more longer term because of the 200-day moving average, very similar to Amazon, quite frankly, a little bit of prolonged neutrality, not really trading. I do want to have your take though on Twitter. Twitter has been a momentum stock up until the last couple of weeks, certainly got caught up in the volatility. If this market does recover, and it certainly does feel like it is doing that here early on, what about Twitter above 70? And again, I'm looking at specific industries here. We're going to look at other industries here in a second.
I think 70 is the obvious buy point. That's where you get through the last 5-6 days of chop, right? So from a trigger perspective, that is the obvious line in the sand. If you're looking to buy the dip in Twitter when it shows strength and gets its act together, I think 70 is the line, and I don't mind it.
Yeah, and looking at, again, looking at the entire sector, you have a few different industries here. Internet content is just one of those sectors. And again, there's only 3 stocks, but very popular names. But one thing I'm seeing in this sector, when you look at Twitter, when you look at Facebook, when you look at Google, there's not a good read on the industry. You got
Correct.
some real volatile action in Twitter. You got some choppy action in Google. And with Facebook, you got prolonged neutrality, right? You don't have an area of comms that is consistently performing the exact same way. And so it's going to be a little bit more difficult, right?
Mhm.
So I
Agreed.
probably, if you're looking at comms, I'd probably stay away a little bit from Twitter, Google, and Facebook, because they're just all a little bit different, all doing a little bit of their own thing, and it's a little bit of a difficult read here. Let's take a look at your entertainment side of communication, though, and this is where a lot of your brand names, the DISCA, the Disneys, the Comcast of the world, the Viacoms of the world, the Netflix of the world, your entertainment, your streaming companies out there, right? So let's take a look at this area of the market. And first of all, Disney's very choppy, but again, keep an eye on $200 to close above there. And I'm thinking more weekly charts, longer term on Disney there. But again, I like that price action. And if we can navigate 200, Disney will have a little bit of momentum. But let's take a look at some of the areas that have, you know, seen momentum, did not get caught up in the volatility, and forming perhaps some pretty decent trades. Let's take a look at DISCA. Discovery here. A little bit of, I mean, momentum darling of the market, DISCA here. Any hesitation, you know, crossover type analysis got gobbled up on breakouts, threatening another breakout off of a 2-3 day high base. Tyler, what do you think of DISCA?
I think it's so incredible that this can only go down one day.
That's it. That's all you get.
It's just so strong. Because you would think, okay, DISCA, you ran from 40 to 70. Can you give me, like, I don't know, 2 red bars? Nope.
No.
One right back up. Like they're buying the crap out of this.
But not only that, Tyler, it's just one down day. I get it. But again, you look at the 4 days consecutively, you got a little bit of a hesitation high base.
You're right. So
Right.
so it at least paused for a few days.
I would love a few more days.
Yep.
Right.
But yeah, I think the momentum's strong. I mean, look, I'm gonna try to pick the top here. I mean, look how trendy this has been. Sure,
Yeah.
buying breakouts has worked. I got no reason to second guess it. You got a stop loss if so, but yes, it's a good trade.
Okay, I like DISCA there. Comcast, I like DISCA a little bit more than Comcast, and simply put, Comcast needs a couple more days to hesitate.
Yes.
Right, just a couple more days, kind of do what DISCA is doing there. Tackle 25 stock, Viacom, VIAC. That gave you 1 day.
It all looks almost exactly like Discovery.
Beautiful. It's very similar. So again, I do think they're aggressive momentum, but both DISCA and Viacom breakouts here off the momentum they've been having. Again, if you're now just waking up, by the way, Viacom on the Tackle 25 at $35.
Mm-hmm.
Okay.
Yeah, it's had a pretty good couple
months. I'm willing to bet the $250 people have to pay for the Tackle 25 probably paid itself. Correct. On that one itself.
Yep.
But let's go back here very quickly. Can the momentum be traded here on Viacom, or do you like DISCA a little better in the short term?
Ooh. The answer is
if I had to make you pick, I mean, there's 6s. I get it. But if you had to pick.
If I had to pick, I'd probably do the DISCA just because it's closer to the pivot.
I think so too.
Yeah.
I like them both though. I like them both. And again, those 2 stocks, DISCA, Disney, Comcast, Viacom, all very similar companies, all running on the same type of momentum, but I do think the leaders there are DISCA and Viacom. And I like the DISCA hesitation a little bit more than the Viacom one there. Let's take a look at some of your advertising agencies. There's only two stocks in this industry. You got IPG, which is overextended, needs some hesitation there, but you do have a potential hesitation high base in OMC, Tyler. Again, not a company most people know about, but still good trend over the course of the last month and a half. High base type analysis. What do you think here?
Pretty. I have never analyzed this company, but yeah, it's a pretty nice little high base or little pennant and breakout sip and buys. So yeah, I like the development. It's clean.
All right, let's take a look at some broadcasting companies. And this is one of the areas with the entertainment side of it, but this is one of the areas that have been very strong for communications. There's really only two companies I want to take a look at. Fox is one of them. FOX, please. Nice little high base potential trigger above 40. Keep an eye on that. Another 1 day in the cooker, and that's on the report. But it might have a little bit of competition with the stock that's was on the list a few times in recent history on the stock of the options report, and that's News Corp, NWS. NWS. Yep.
Yeah.
Breakout.
So it was on the list this week, I think.
It was.
Yeah, nice little breakout. Secondary entry, what, should they get over the pivot maybe?
I think you can go now over today's high.
Yeah.
I think with the breakout yesterday, you couple that with the retest of support on the intraday today.
Yeah.
Right. You couple that. I think you can go. Right. I don't think you have to go above yesterday's high. I think you can pick your intraday level that you're comfortable with right now, but that's because of the slight support bounce they had today. But I do think you're fine on News Corp. Let's take a look at. Let's go to telecom services. This is your AT&Ts, your T-Mobiles, your Verizons, and your Lumen Technologies. Now, AT&T high basin, slightly south of 30. This is not a company that anybody trades. It's a company you cash flow on. But I just wanted to bring up AT&T and remind people that you could have been doing 6 months worth of cover calls here on AT&T. Real good cover call stock. T-Mobile, volatile, doing nothing. Verizon's grotesque. But you do have a potential of the 4 potential plays in telecom services. LUMN setting up in a little bit of a short-term flag-based pattern here. The rest of this area, telecom services, again, dividend, boring, cover call. My daughter be like, boomer much, right? That's T-Mobile, AT&T, and that's obviously Verizon. What do you think of LMN from a directional play here?
Yeah, I mean, if you want momentum, this is the place that's got it. Came into the year at $10. I mean, on that spike, come on, it's up 50%. To 50%, you'll never see that on Verizon or AT&T in this short a period of time. Volume patterns looks great too. The recent upswing here, nice accumulation coming in, light volume on the pullback so far. That's constructive. Yeah, that's constructive.
Well, so, and when I'm looking at them and I'm saying, okay, you do have a directional play here if you want telecom services directional, but if you don't and you just want to keep it boring, AT&T seems pretty decent right here. Good dividend, really good liquidity for cover calls. Like the neutrality long term, but again, that's if you're looking more from the cash flow. And then last is electronic gaming, and gaming, you only have 3 stocks. You have Activision, EA, and Take-Two. Let's take a look at all 3 of them. Let's take a look at Take-Two first, actually, Tyler.
Yep.
Take-Two coming off of the lows, really fighting at that 200-day moving average. I don't think all 200-day moving averages are the same. Take-Two is testing one of those. Do you have any interest in Take-Two at the 200-day moving average?
I would have interest if I liked the company long term. I like other companies better than this long term. But
Activision.
Yeah, Activision. Yeah. So like if this was Activision and I loved the company, or if this was a Disney or something, then of course.
Yes.
But that's where you put on your more fundamental hat versus technical hat.
Yes.
You know, so
yeah, and that's why I said not all 200-day moving averages are the same. If it's a nice little fundamental thing that I feel has good value, yes, take two. I don't have that opinion, and because of that, I like more strength here. I like trading into strength when you don't have value, and when you're looking at take two, 200-day moving average bounce, I don't blame people for looking at that. But again, I want to see strength here. You take a look at EA, and you're going to see a very similar type of analysis that you have on take two. But Activision here, you know, held up a little bit more than its counterparts did in EA and Take-Two Entertainment. Activision kissing off, you know, holding above that 200-day moving average, holding his previous pivot before the gap on the earnings. I'm interested in Activision, but then again, I'm always interested in Activision. It would have to achieve 95, but what do you think? A little bit of a buy the dip candidate here, Tyler.
Kind of reminds me of the NASDAQ, where it's like, look, you don't think this bear retracement's going to work. You think ultimately it goes higher. It's just a matter of when you want to get involved.
Yeah.
I mean, look at the weekly, right? If you think, that daily's a little messy to our little lesson yesterday, you zoom out. Like, look, if you like the company, what's not to like about a nice little pullback to the 20-week MA? And what's not to like about this week? It's a nice bullish reversal candle. So I think you can
compare that against EA's weekly chart, and compare that against Take-Two's weekly chart.
Right. It's more compelling.
And it's more compelling. And so you would say Activision's weekly chart better than Take-Two's, and Take-Two's is better than EA's. Right. But again, Activision leads here. And so if there's a little bit of a buy the dip candidate in this base comms, I do think that buy the dip is Activision, quite frankly. Outside of that, I think there's quite a bit of high basis and strength forming up. I think we're going to have probably 3-4 stocks on our options report and stock report tomorrow in comms.
Yeah, I agree. As you guys are going through the industries and the stocks here, I'm already seeing several that I'm interested in, and I love the analysis. And this is a very, very, I believe, educational type of segment here. I hope people are learning out there, because we started with the sector, Matt, and then you're taking them through the industries, the individual components. This is, in essence, what top-down analysis is all about, and we talk about that all the time.
It's not as healthy to compare Activision against Apple as it is to compare Activision against Take-Two.
That's right.
Right.
That's right. I like it. I love it. And I love the weekly chart on that Activision there, Tyler. It definitely was a good constructive looking chart, and great job there, guys. Wonderful. All right. Anything else on comps here, guys?
Well, just a quick point. If you look through the sector and you're like, I don't really find much I like, you can always play the ETF, right? That's always the low hanging fruit.